how to spot breaker block easily and get insane risk to reward ratio. In this video I save you years on finding the most easiest and profitable way to trade a breaker block just in under 10 minutes. Long story short, a breaker block is an order block broken by an expansion. Simple as that. By the way, I highly recommend you to watch this third episode on order block. You will get there a step-by-step guide on how to trade it profitably. The link will be in the description. So, by what factors you can spot a breaker block? A liquidity grab behind the previous high or low. After that, the test of support or resistance zone. I made for you a simple algorithm you should follow to spot it easily. Look for a stop loss rate. After that, a new swing high or swing low will be created. Then the price tests the point of interest and expansion breaks the order block, which turns into breaker block after this. Also during this move, price should make a break of structure. And finally, price returns to test a breaker block and reverses out of it to continue an expansion. A breaker block is your chance to open a trade with a low risk and high rewards. So what additional confirmations may help you to increase probability of successful trade? So in this example we have a bullish market structure. Before the reversal, this expansion grabs the liquidity of this low and creates a new one in the zone of support. After that, we can observe the reversal and break of structure. An essential condition is that the breakout move must be sharp, so the highest candle before the final short-term price drop is a breaker block. Usually during a breakout we can observe how an imbalance is created and it acts as a magnet for the price. If the zone of imbalance is too large, utilize a breaker block to spot the zone of the price reversal and to find precise entry. Many of you might wonder why the price returns to the breaker block area. There are two main factors consisting of smart capital and retail traders. As you know from the first episode, the smart capital controls the 100% of the price movement. To grab the stops behind this low, smart capital must open a position. After the manipulation is done and the price goes in the opposite direction, their orders are at loss. Regarding retail traders, they're also shorted this high and try to catch a breakout of this level in hope the short movement continues. As you remember, the smart capital opened positions to deceive retail traders, so they interested in closing it. So they move the price toward this area. When the price reaches the breaker block, retail traders also would like to close a position at a break-even or at least to minimize their losses. And what important to mention, when all these retail traders wanna close their short position, they need to buy out an asset. What do you think gonna happen when you have a lot of buy orders? That's right, it spikes the price out of the zone of breaker block. That is just simple market mechanics. But what most TA videos says? Candlesticks, indicators, triangles, all this information is designed to make you a liquidity. Because when someone loses, someone wins. Think about it. Let's summarize 3 simple steps you need to trade breaker block profitably. The first one, look for liquidity grab from the previous high or low. The second, look for an expansion that break an order block into a breaker block. And the third, the price makes a test of the zone of support or resistance after the liquidity grab. Also keep in mind these small details nobody talks about. You wanna consider only breaker blocks which follows the trend from a higher time frame, it's 1 hour and higher. Also remember that breaker block may serve both purposes as a trend continuation or a trend reversal sign, and a bullish breaker block shapes by the same logic as a bearish. Now we're gonna review real chart examples how can you spot a breaker block easily. Ethereum 4-hour time frame. There is the support zone test with the liquidity grab from the previous low. Following the rules I mentioned before, this candlestick is the breaker block. The confirmation is this expansion which broke it. If you look above, you can see another breaker block. It was created in the imbalance area. This serves us as the first trouble area where we're going to take the profit. Entry out of the 50% level of a breaker block area. I set a risky stop loss right after it. The risk and reward ratio is 1 to 6. ApeCoin 1 hour time frame. After the drop, the price went into a range. There is an episode how to trade ranges easily, check the description. You can see the deviation out of the lower range's edge where the order block was created. I can consider it as the zone of support. Here you see the liquidity grab from the previous low and the test of the support zone. This leads us to conclude this candlestick is a breaker block. Our target is the upper edge of the range where we are going to take the profit. Entry is out of the 50% level of the breaker block. The risk and reward ratio is more than 1:6. Polkadot 1 hour time frame. We can observe the bearish market structure here. The price raided the liquidity from the previous high and tested the mitigation block in the zone of imbalance. They both are a resistance zone. And after that, a sharp downside expansion. As all you can see, the rules were met. This is a breaker block. The entry is at the beginning of the breaker block. The stop loss is set behind. The take profit we can set on these lows. The risk and reward ratio is 1:5. You can open a trade from the beginning of the breaker or out of 50% level. To measure this level precisely, use a Fibonacci retracement tool. The settings of the Fibonacci retracement tool you can find in my Telegram channel. The link is in the description. If you trade aggressively, just place your stop loss behind or above the breaker block. But remember, you increase your risk to reward ratio by doing that, but also you increase the chance of stop loss being hit. If you wanna trade conservatively, just place your stop loss behind or above rated high or low we mentioned today in the rules. The risk and reward ratio in this case reduced, but the safety is higher. It's completely up to you what trading style you like. I prefer aggressive. Some people prefer conservative. Just look for a good risk to reward ratio. I recommend at least 1:3. Mastering concepts I share in this course increases your confidence, helps to achieve your financial goals, and allows you to spend less time in front of the screen. Good luck to everyone and trade wisely!